Hey folks, so I've been getting asked a lot lately, is gold better, is Bitcoin better? You got Peter Schiff on the left and you got Anthony Pompliano on the right. Everybody's saying one's better than the other, but they're harmonious in their own way. And so for me, I think it's a generational thing. When it comes to Bitcoin, I think of my daughter. They are raised in a world where they understand Bitcoin, the digitization of money. And our grandparents understood, I need to have hard assets. And the scarcity play works on both sides. So if anything, Bitcoin and gold are kind of like my grandfather to me to my daughter. They're 3 generations of understanding the scarcity of assets and the importance of having something in your portfolio that isn't tied to the stock market, isn't tied to the US dollar or fiat currency, but is an independent money. Now, there are some key differences. I recently just sold off some of my gold and silver earlier this year in order to get more Bitcoin and Ethereum and other crypto assets. With my gold and silver that was in my safe, I had to call a broker dealer, get myself a price that was fixed for that gold and silver, and then I had to ship that gold and silver off, which, by the way, gold and silver are very heavy. Gold's not so much when you think about it per ounce, but with silver, it's very heavy. So you got to take it all, you got to get it shipped, you got to get it insured. And it was about a 3-week process in order for me to say, I want to sell my gold and then get paid for my gold. With Bitcoin, I can click, and I've now moved out of that asset class. So the velocity of the money is a little bit different. The other thing you have to think about is worst case scenario. So the dollar fails, the stock market crashes, and you're thinking about the future of your personal portfolio, your personal wealth, your sovereignty, right? For me, to have something that is transportable and very finite is very powerful. Real estate, you're never going to pick up and move. Gold and silver, you can pick up and move, but it can be cumbersome. If you have $1 million worth of gold, that's pretty heavy. $1 million worth of silver is even more heavy. $1 million of US dollars is actually heavy. And if you've ever traveled, if you have more than $10,000 of cash on you, you have to declare it whenever you come and enter out of the country. So there's some transportability friction. Bitcoin is a seed phrase, right? You don't actually even need to carry a ledger with you to move your Bitcoin because you have the seed phrase. When you think of the layers of transportability, most difficult is real estate and land. Second most difficult is gold and silver. Third most difficult is US dollars or fiat currency. And the easiest transportable asset is Bitcoin and other digital assets. When you think about gold, Bitcoin, and real estate are very harmonious with each other overall. Bitcoin is ultra scarce. Gold is scarce and real estate is scarce, but it has to also still be mined in the same way or built in the same way. That's what makes it as kind of a scarce asset. It can't just be printed like fiat currency can be printed. And then let's look at fractionalization. So with gold, you can get it down to the gram, but the most commonly accepted coin is the 1/10 ounce gold American Eagle, or other derivatives out there, the Swiss franc, the rooster. These are all like small gold pieces. That's about as far as it goes. So then you have to jump to silver if you want to get down fractional more. And silver can be fractional down to sizes as well. With Bitcoin, what's beautiful is it goes down to the Satoshi, the 10th decimal point. So you can have $2 or $3 worth of Bitcoin versus you're kind of stuck at about $1,000 worth of gold at a $10,000 price point, or at a $50 silver price point, you're still kind of at $15 to $20. So there's some fractionalization there. But here's the reality. My big takeaway is gold is not better than Bitcoin, and Bitcoin is not better than gold. They're both critical to a balanced alternative portfolio. So if you're looking at your overall portfolio, and the modern portfolio theory is you've got your stocks, your bonds, your mutual funds, and you've got a piece that's in alternatives. And you should have some of that in Bitcoin and other crypto assets, like some of the blue chips like Ethereum, XRP, Litecoin, etc. And then you also need to think about having some gold and silver and mixed into that, physical or digital, which we have that on our platform. And then you've got to have some physical real estate. And that doesn't mean I have to have a house. That means I can have pieces of land. There's great land division pieces out there, fractionalization of that. But these are the 3 key assets that really make up a alternative chunk of your portfolio. So they're actually mutually beneficial to each other. They're not one versus the other.